There is a moment, yes, that fragile instance, where everything you thought you understood cracks beneath your feet. The ground shakes and the air bristles with questions left hanging, sharp as broken glass. The dollar, that old, weary monarch, is crumbling, slipping toward depths it has not plumbed in nearly a decade. Yet Bitcoin, the digital phoenix, is not soaring as predicted. Instead, it falters, melting down, drifting further from glory, and I find myself standing at the edge, peering into the void between expectation and reality. And this is Crypto 101 Central, a space where we do more than follow price charts. We wrestle with the soul of the market. If you're new or returning, and you feel this unease in your bones, subscribe. Join us, stay close, click that bell, because these are not days for passivity. They are days for waking up, for catching every bell toll that signals another twist in this story. For years, my breath synced with the ebb and flow of the dollar and Bitcoin, an unspoken dance. When the dollar rose, Bitcoin fell, and when the dollar stumbled, Bitcoin shot up, electric and fierce. The math was a simple poetry, a negative correlation woven deep into my confidence, reliable as the pull of nostalgia on sleepless nights. Back then, in late 2023, the dollar flexed its might, and Bitcoin bowed, slumping from heights to valleys. Those were different times, when the rules obeyed themselves, and cycles felt comfortingly predictable. Now everything is unmoored, the dollar is falling, 18 months of slow erosion, and yet, Bitcoin retreats alongside it. No heroics, no contrarian surge. Why does it feel like the cycle has snapped, like we suddenly find ourselves at the mercy of larger, colder forces? I reach for sense and meaning, for something to anchor me. Once, the 90-day correlation between Bitcoin and the dollar throbbed at negative 0.70. Today, it is shattered, replaced by an odd kinship between Bitcoin and the heavyweights of tech. The Nasdaq, with all its shimmering risk, now pulls Bitcoin along in the same current, a current that feels less like liberation, and more like driftwood surrendering to a flood. It is so easy to forget, in days like these, that the market is not just numbers. It is emotion, collective narrative, and above all, liquidity, the lifeblood underneath the skin. Many mistake weakness in the dollar for an invitation, the first note in a symphony of risk. But the reality is crueler and more intricate. Dollar weakness does not guarantee a surge of new money, not when the real engines of liquidity spin soundlessly beyond the horizon. Offshore, deep in the eurodollar market, 16 trillion pulses in darkness, double the tally from before the world cracked in two, back in 2008. The dollar falls, sometimes not from plenty, but from quiet desperation, yen interventions, rebalancing, all these invisible hands. But if actual liquidity does not expand, then all we have is a mirage. Water shimmering on the road but offering no relief. A well-known global liquidity analyst, whose index has become a map of heartbeats, shows us that global liquidity crested in late last year, pausing at 187 trillion, before slowing, before the cold settled. This is not a pause. It is an omen. A tightening, invisible yet certain, begins to constrict around us. Even as the Federal Reserve abandoned its quantitative tightening, buying 40 billion in treasury bills monthly, I know it is only maintenance, not renaissance. Money is not rushing in. It is holding the line, bracing for something monumental, the coming debt wall. It is strange, isn't it, how gold still glitters at times like these? Investors searching for safety, like children lost in a storm, reach not for the noisy promise of Bitcoin but for the mute certainty of gold. Last year, gold funds around the globe overflowed with 89 billion in new capital, central banks hoarding nearly 900 tons. China's hands are steady, relentless, selling treasuries, filling its vaults with gold, reshaping the flows that once buoyed crypto's wild rise. There is a poetry to their caution, a coldness that precludes risk and pushes Bitcoin into the same shadows as tech shares everywhere. Bitcoin was supposed to be digital gold, an anchor, not a kite. But when missiles are fired, when presidents threaten tariffs, when wars whisper at the borders, it is gold that rises. Bitcoin, meanwhile, is sold off, falling with the hateful symmetry of stocks. The ratio of Bitcoin to gold falls to depths I have not seen before. In all the emotion, in all the myth-making, there is this undeniable pain. Bitcoin is no longer a haven. Not here, not now. And yet, I wait. I wait because markets, like people, are always becoming, never finished. This pain has direction, this confusion has roots. The monsters are real, a debt wall taller than memory itself, 10 trillion of US. Government bonds coming due this year, 1/3 of all the nation's borrowings. 3 trillion in corporate IOUs must find new homes, most at rates double or triple those dreamlike years ago. Imagine, 3% becomes 6. Profit evaporates, leaving scarcity and fear in its wake. Every distressed dollar that pays off old debt vanishes from the future of risk. Bankruptcies rise, 81% more than before, names once whispered in awe now headline tragedies. Saks Global, unable to meet a $100 million payment, bows out under the weight of $2.7 billion in obligations. Commercial real estate shutters, $1.5 trillion due before the end of next year. Offices that once bustled now await something darker. Refinancing at rates impossible to survive. The world's capital, once wild and heedless, now flees to safety, to certainty, to assets that do not dream, that do not disappoint. This has been called the greatest refinancing test of our time, a $40 trillion tidal wave, rolling through markets until only the strongest remain. And I see, too, the machinations of the East, Japan and China moving pieces on a board we barely grasp. The Bank of Japan, at 0.75%, highest since 1995, is laying new traps, unwinding carry trades that once propped up Bitcoin by the billions. 2 or 3 billion, 20 or 30. Now all unwinding, blown apart with a cough from Tokyo. Each policy move there is like thunder half a world away. Bitcoin stumbles, stop losses trigger, and the river of risk assets runs dry. China, too, is relentless, divesting from American bonds for 9 months running, slicing holdings to less than half what they were at the start of the last decade. The capital once destined for digital dreams now flows into gleaming bars of gold. 14 consecutive months of gold purchases, never impulsive, always strategic. These are not the wild swings of retail hope. These are the calculated choices of power. So when does our familiar world return? When can Bitcoin decouple from tech and reclaim its legend as a counterbalance to a failing king? There are thresholds. 4, stark and unyielding. The Federal Reserve cuts, not just once, but enough to drag rates under 3%. Global liquidity expands again, not just stabilized but surging through the cracks left by debt refinancing's storm. Bitcoin itself must roar past crucial resistances, 94,000 and beyond, singing back to the stars. The dollar must break below that old wall, 96.2 on the index, sustained, not flickering. History suggests a turning, perhaps as soon as spring or early summer, when cycles stitch themselves together, if only for a moment. Do not be fooled, though. Hope is no currency. All 4 must merge, every signal green, every chain unbroken. And we remain trapped here, waiting for angels that don't appear. The death of the dollar is not the resurrection of Bitcoin. The shift that matters is liquidity, not weakness. The true turning point lingers, always just beyond, always testing your patience. These, then, are times for quiet watching, for knowing that sometimes the greatest courage is to wait, to step back, to guard your capital like a flame on a windblown night. Now, if you have felt any of this confusion, if you, too, wonder whether gold is the way, or if the dip is a siren song to stack more SATs, speak. Lend your voice in the comments. Let me know, has Bitcoin's mantle as digital gold weathered this storm, or has it drifted into tech's embrace forever? Your thoughts shape the conversation. Your questions ignite our search for clarity. If this journey moved you, even a little, press that like button to signal that we're not adrift alone. And if you crave deeper dives into the debt tsunami reshaping our nights and futures, there's a video right here waiting for you. Curious about gold's wild run? We've pulled those threads, too, just over here. Hit that bell. Do not miss what comes next. We are not done. We are only just beginning. Signing off, until the next time the market's heart stirs and calls us back.